what drove that first move from 10K to 60K? Well, as soon as the ETFs, $300 billion is coming in. Nope. More money will be converted from fiat to Bitcoin than the previous 15 years. You just keep thinking it's all going to work out. And then you realize, wait a minute, why am I paying, $18 for a hamburger? And why is gasoline costing $4 a gallon? And why is that plane ticket costing $700 instead of $300? That's because your money isn't as good as it used to be because they had to print more of it to fund these deficits. And they stole my Bitcoin. Like, what are you talking about?
Wait a minute, everyone. Get ready for the ultimate crypto investing website, the Bitcoin Seller. It's your golden ticket to an exclusive insiders club. Expert predictions, on-chain data, and breaking news, all for you. Imagine all crypto insights landing in your inbox daily, like having your own expert team. Don't miss this VIP opportunity. Click the link and secure your spot. Join now and ride the crypto roller coaster with the Bitcoin Seller. Mark Yusko is an American investor and hedge fund manager who is the founder and chief investment officer of Morgan Creek Capital Management, an investment firm that advises pension funds, endowments, and wealthy individuals. He says that fiat currencies, which are money issued by governments, could lose value due to inflation, which is the rise in prices of goods and services. He gives examples of how inflation could make things more expensive and reduce the purchasing power of money. Now, let's hear more from Mark Yusko.
What drove that first move from 10K to 60K? Okay, liquidity. Well, what do you mean, Mark? Well, GBTC had just kind of become de rigueur and people were talking about it, and a bunch of money went in. And a bunch of money went into a small asset and demand went up, and we went from 10 to 60 in a heartbeat, because about by my estimates, about 10-ish billion in an asset that was trading about $2 billion a day went in. And we went up. And then Elon famously tweeted, well, we don't like it anymore, so you can't buy your Tesla with it. And I might sell some of it out of Tesla, and because he had to pay some bills. And it crashed. And then liquidity went the other way, right? Because people were like, oh, I'm out. And so, but then by summertime, people are like, well, it didn't go away. And I kind of liked this asset, and the halving had occurred. And remember, what the halving does is it reduces supply. So there are two types of things that will drive price, right? You got your supply and demand curve. You can increase demand. So if you increase demand, if you shift the aggregate demand curve, the price goes up. P0, P1 is higher than P0. Second thing you can do is you can shift supply. You can restrict supply. So if you have a demand surge, GBTC, and a supply cut, what happens? Price goes up. So, but then what happens, and we talked about this, is when the price is below fair value, investors buy. That's what investors do. They buy things below fair value. Then what happens is, as the price starts to move, the traders come in. And the traders don't really care about value. They just want movement. So they start. And, as the price keeps moving up, more traders come in, more buyers come in, great. And that actually attracts some new capital into the asset, whatever shiny asset that is. Well, then the speculators and the gamblers come in. Well, who are they? Well, they're the people that come in, they don't give a crap about anything. And just a number go up, I'm in. And I'm doing it with leverage. And back then, you could still get 100 times leverage. I mean, I've told this story on the show, and I shouldn't pick on my brother, but my brother called me after the collapse and said, hey, they stole my Bitcoin. I'm like, what are you talking about? He says, well, I put it a bit. I'm like, stop. You levered an 80 vol asset 100 times. You got a margin call. You couldn't make it. That's not stealing. That's the way the world works. And if you had done that with, Cisco stock in 2000 or Microsoft stock, or which actually happened, or Amazon stock, it went down 94%. Lots of people got liquidated. And that's why they're so sharp. It's this unwinding of the leverage that causes those sharp downdrafts. And so then you get all the way, you go past fair value, you go all the way down to the depths, and everybody's like, oh, I hate this. It's never going to go back up. And then quietly the investors come back, and that's why you have these cycles. And so where are we today?
Mark says that GBTC, a fund that invests in Bitcoin, increased the demand and price of Bitcoin. Elon Musk, the CEO of Tesla, a company that bought Bitcoin, tweeted against Bitcoin and caused the price to crash. The halving event, which reduced the supply of new Bitcoins, helped the price to recover. He then describes the different types of investors and traders who buy and sell Bitcoin based on its value, movements, or speculation. Mark gives an example of his brother, who lost his money by using leverage, which is borrowing money to buy more Bitcoin. He says that leverage causes sharp declines in the price of Bitcoin, and that the price can go below its fair value. When this happens, many people lose faith in Bitcoin and think that it will never go back up. Mark sees that this is when the investors come back and buy Bitcoin at a low price, starting a new cycle of price appreciation. Let us know now where we are today in this cycle.
So we have, for equities, we had the rise, and then people said, well, in November of 21, they're like, the numbers don't add up. Get out. And the Fed took liquidity away, and so people are getting liquidated. And so, well, then in October of last year, what happened? They actually increased liquidity. They didn't cut rates, but if you look at liquidity measured by cross-border capital and others, and the Goldman Sachs Financial Conditions Index, we're looser today than any time in the previous 10 years. And so that massive wave, and part of it was China and a bunch of other things, but the bottom line was liquidity flooded back in, and the gamblers are back. And the short sellers got squeezed. Short sellers, since October, lost about $185 billion trying to be short the Magnificent Seven, because they're looking at these things going, these things are growing single digits, and they're going up double digits, triple digits. Doesn't make sense. But if you try to short something that is in this mania phase, you will get taken out. And I won't necessarily compare NVIDIA to MicroStrategy, but go back to 2000 and look at MicroStrategy's chart. Started at $3, went to 100. They carried out all the shorts. Then it went to 200. They carried out all the shorts. Then it went to 330 something. And everybody said, oh my God, it's going to the moon. And then went right back to 3. And they got fined by the SEC and a bunch of other stuff. But the reality is, when it breaks hard. So flipping from equities, I think the double top in equities, right on, perfect analogy. I would be very skeptical of holding U.S. equities here, and the forward-looking returns are very low. Bitcoin, on the other hand, we're just getting warmed up. The halving is 3 months away. That supply shock is real. And we had a little hiccup in the last couple weeks because everybody thought, well, as soon as the ETFs, $300 billion is coming in. Nope. We got 5. That is a lot. But we didn't really get 5 because GBTC made a decision to keep fees high. So they lost roughly an equivalent amount. And so we haven't had the net inflow yet. And those overlords,
almost $1 billion.
Which is great. But that billion is going to turn into 10, is going to turn into 30. And I'll stand by my statement. I believe in 2024, more money will be converted from fiat to Bitcoin than the previous 15 years. That's a big ass statement, but I believe it. And it's because most of the increase in the market cap of Bitcoin is not new money.
Mark talks about how equities rose and fell due to liquidity changes by the Fed in China. He says that shorting these stocks is risky because they are in a dysmania phase, which means a state of excessive or irrational enthusiasm. He compares one of these stocks, NVIDIA 3, to MicroStrategy 4, a company that had a huge rise and fall in the dot-com bubble of 2000. He says that MicroStrategy went from $3 to $330 and then back to $3 and faced legal troubles with the SEC. He says that when stocks like these break, they break hard. He says he is skeptical of equities and bullish on Bitcoin. He sees that Bitcoin will benefit from the halving and the ETFs. He says that he believes that in 2024, more money will be converted from fiat currencies to Bitcoin than in the previous 15 years. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.